Hello there, Empress ladies. This is Monique from the Empress Trader, the Trading Academy for Women. And we are very excited to have you join us today. And I have a special guest on the call webinar. It is Brian McPherson, and all the way from New York City, New York. And he is a trader, and we've both been trading. He is my brother, and we've both been trading since 2009. And I'm very excited to have him on this webinar and this call. So we've got a lot of fun stuff and interesting and exciting information to share with you about a trading strategy that my brother Brian has created. He is the research part of my team over here at the Empress Trader, and I'm so excited because he is always looking for and researching different strategies and ways to be a more consistent and profitable trader in the stock market. So, with that said, he comes with a wealth of knowledge and wisdom of the stock market. So I'm very excited that he decided to share with us this information on his new strategy that he has created. So we have been studying the candlestick charts, formations, and chart patterns, and using the time charts. And what Brian is about to share with us is how to use the Renko charts and um, as another option, or either in a combination of using the time charts as well. So it's very exciting and very interesting way and strategies and setups to use uh, as an alternative or combination of what we've been doing with the time chart. So without further ado, here is my brother, Brian McPherson, extraordinaire trader, hailing from New York City.
Thank you, my sister Monique. I just want to thank everybody for taking the time out to possibly observing a different option to candlestick reading and recognizing patterns on the chart. Thank you, Monique, for bringing me aboard. Let's get started. As you can see, I use the Renko charts. It's also a combination of Renko and the Haken-Ashi indicator to kind of smoothing price out from the time-based charts. On my left side, you see a typical 5-minute chart of crude oil. I used the NinjaTrader platform. I find it extremely user-friendly and very the drawing tools that can be found on mostly all platforms, but I find it very comfortable for me to use NinjaTrader platform. So on the left side, you have a 5-minute chart which shows the up and down of price action on a typical day for crude oil. And on the right side, you see the Renkos. And one thing that I like about the Renkos is the smoothness that it presents when the market is trending. Okay. Um, I also work with students here in New York, and there were a lot of questions that were still coming up after the foundation was built around reading candlesticks and patterns. They still was having a little bit of difficulties entering, exiting, where to place their stop loss, how long should they let a trend run, when do they cut their losses. So those questions were constantly on my mind when I was creating this system of trading here. So the first question we wanted to address was the entry. How do we get into a trade? I still utilize my blank chart as uh, or as a reference point to still being able to recognize my candlestick patterns. Um, the Renko allows me to enter in early. So I use my 5-minute charts to recognize. I'm sure my sister has gone over some of these patterns with you. She's a little more in depth in candlestick and pattern reading than I am. Um, Mine is limited to just a few. But here, if you're not familiar, but this is a double bar pullback because it's pulling back against the trend because the trend is up by higher lows being developed, and we had a double bar pullback against the trend. So on my Renko chart, uh, it's showing me how I can possibly enter in on the continuation of this uptrend by the crossing of this is a basic 9 moving average. Everything on my chart can be found within the NinjaTrader platform. So there's no proprietary anything here. I use default stuff, critiqued a little bit from NinjaTrader, and I'm very fond of my drawing tools. So once I see that a pattern comes in on my time-based charts, I'll mark it on my time-based charts and see how the Renko bars cross uh, that same particular area. And here we have the double bar pullback. So what I like to do is I like to mark the second bar of the double bar pullback. It's closing as you were. It's high, okay? And then I look for an entry on top or a close above the high of that double bar. And the Renko bars just confirm the direction of that continuation of the trend. And also, so the entry would be above the trend because I have a trend channel in here showing me the direction of the trend on the Renko. So once that area was penetrated with a closing bar above my trend channel, that was my entry to go long. Okay. Now the next question was, where do I place my stop loss? Well, I created not created, but I used a function of NinjaTrader to turn my 9 moving average into like a stair step. So as price action is stair stepping up, I'm following behind one stair step behind price action. So as price action moves up, my stop loss moves up the previous step. So it gives me uh, a structural activity or a structural pattern that I can use to manage that trade once I'm in. So I take the guesswork out of where to place my stop. I just follow my step as price action moves up until we actually get a close above my step, which is up here, which gives us a full advantage to get the full development of that trade. Okay. Um, Even that was still kind of, they were still kind of having difficulty. So what I did was I incorporated in, which is also a free function of NinjaTrader, is that when price action broke that step, I turned on the signal of the break. So this gives you more confidence that when you're taking that trade, you know that there has actually been a breach of the down or the pullback in this case, the pullback of the trend. And when it breached, it gave a signal that you was actually getting a closing above the trend. So that answered the question of where do I get in? Where do I place my trade, my stop loss? And where do I get out? So that is the other option that we will be adding to my sister's academy So to show that not only from candlestick reading patterns, but you also have a systematic trading available to you as well. Monique?
Okay, so um, so you're saying that so your nine moving average and your trend following arrows, this is available for free on the NinjaTrader uh, platform.
Yes,
The,
and what
the
is
indicators that are
uh,
available.
yes, and what is not available, we will make available to our members.
Okay. Okay. Well, I have showed my students how to import indicators. So, if anybody wants to use that, they can certainly use it, and we'll get that sent over. All right. So it sounds like what it looks like is that the Renko chart actually smooths out the all of the smaller candlesticks that can actually happen as well. So I noticed that on the timed uh, chart, the wicks, there are wicks and stems. So what happens with the wicks and the stems when you're looking at your chart, the Renko chart? Because I noticed that I don't see as many. So what is actually happening when I'm seeing that? Because I don't see that on your chart.
Well, the stems on the time-based charts compared to the Renko allows me that it will give me an opportunity to trade a stem pullback uh, uh, on your time-based charts. So here we are on the 5 minute chart. It's showing a stem, and on my Renko, it's actually showing a possibility of taking a short trade in that stem. So it just gives me more opportunities that when a stem does show up on my time-based charts, my Renko will show me that it's either actually a pullback that I can take advantage of that pullback or a
Mm,
continuation.
okay. So would you say that would that be if the trend is if I'm looking at my let's see my 200 moving average or my 100 or 50 moving average, if those moving averages are giving me an indication that the trend is still in an uptrend, would you recommend that I take that short even though it's the moving average, the larger moving averages are giving me the indication that it's a uptrend.
No, I would leave counter trend trading to advance. That's not something that I advocate with novice traders. When I'm teaching a new trader, I tell him to ignore all the down signals or pullbacks and stay with the trend.
Okay, okay, alrighty. And what is the green bar? Just briefly, what is the green bar that's down at the bottom? That green bar that's down at the bottom of your screen.
Well, you mentioned about a 200 moving average, a 50 moving average. I like to keep my chart as clear as possible, so I found a indicator that I can incorporate the 50 moving average as an indicator on the bottom, and that this green bar here is my 50 moving average.
Oh, okay. Okay. All right. Well, this was very interesting, and it's really exciting because it gives a person, a trader, an opportunity to smooth out all of the noise, as the industry term, all the noise of the smaller of the time chart. So you're saying that I could actually use both of these instead of choosing either one, or
Yes.
would you recommend that I use both of them?
No, no. I would, in my opinion, I would stay with both so that you can continue. studying candlestick patterns, because the ultimate is we want to get to where we could just read a blank chart.